Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it will be relied upon as any form of personal advice. Go Market Securities does not know your personal scenario nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It is just general in nature only. Today is the start of bank earnings season, and it's going to be a very slow burn this year because of Easter and also because of Anzac Day. It means it's going to go over several weeks rather than happening in sort of a consolidated period. And it's the back end of it as well where the most concentration will happen, the last parts of April and the start of May. You then get the big players, Macquarie, ANZ, Westpac, NAB. But you do get some others in the middle, and you then look at things like Bank of Queensland has shown you what the themes will be. First and foremost, I need to highlight very clearly, you're going to see really decent jumps in cash earnings. And that should be expected. We know that we started to see a really big uptick in housing. There was definitely a FOMO movement going on there, and cash earnings will be in the double digits for some, not for all. I'd probably highlight Westpac and ANZ as the ones unlikely, the ones that will, places like NAB, places like Macquarie. But it's because of what's happening that those numbers look great. And what I mean by that, Bank of Queensland has highlighted to us today that they, like what we've seen with CBA before, are unwinding all of the pre-pandemic movements that we've seen around, banking in for Australia, making sure that provisioning was high around bad and doubtful debts, around the possibility that repayments were going to freeze up and seize up. All of that's been unwound. All of that amortization's coming out. And that is making the results actually look stronger than they probably are. Because if you again look at what we've seen from CBA back in February and now from Bank of Queensland today, it shows you very clearly that competition is still well and truly at the forefront. In fact, as a client, you could be rarely looking to actually move around quite well, even in the current environment. And Bank of Queensland have shown you that today. Net interest margins were again back in the one handle, and they continue to be at the lower end. If you look also at the competition and the mixes that they're getting for fixed income, they're getting smashed like everybody else is. So that is certainly one point to have a look at. Yes, bad and doubtful debts are significantly better. And even at Bank of Queensland, which has had some headaches with some of its rules, it's a good thing to see, which will translate through to the others as well. You also then see that they are looking forward to the next 6 to 12 months. They see improvement in net interest margins for existings, but not on new loans. So all of that sort of brings in and feeds into the idea that banking is still a very, very tight space, and an interesting space at that. How higher rates translate into loan growth is, as you can hear from Bank of Queensland, going to be tricky, is basically what they're saying. And I think that's the same with what we're going to see with the rest of them. But therefore it means clearly that the better banks, those that are more efficient, cleaner, offering you a better service and have a more diversified offering, not just in retail but also in institutional, are likely to be those that outperform. And there has been a growth in this in terms of a divide between ANZ and Westpac, CBA and NAB, and on the same basis, those in better positions like CBA and NAB, Macquarie for example, versus those that aren't, maybe like a Bank of Queensland, that divide possibly could get wider. And that I think is going to be the biggest talking point around earnings season, is that there is clearly the best and the rest.